Good evening, folks. This is Reddy from Wealthy Options. Welcome to 0 TTA Pulse. Today is 5th June, which is Nifty expiry. So let's try and decode today expiry. Today is an interesting day because the Nifty straddle premium has been kept on falling from Tuesday afternoon, I think around from 2 o'clock, and yesterday also it was a steady fall, and yesterday was kind of a smooth day. I mean, for those who have traded 1 DTE, and straddle premium closed around 150 yesterday, ATM straddle premium, and today I was trying to see what would be the open. I was expecting somewhere between the open would be somewhere between 120 to 130. I thought at 916 we may get a premium somewhere between 110 to 120. Straddle premium did open with 30 points of overnight decay, and it opened around 120 rupees, but in the first minute it quickly dropped down to 105. So given the volatility, it's not a great premium, but at the same time it's not a bad premium as long as it is at least above the 100, given we don't Nifty do not throw the bouncers throughout the day. And so we got for the some of my entries which started at 950 just before 916 or 916, so they got premium around, I think 105, 106, somewhere around. And then from the underlying point of view, Nifty just opened with about 50-60 points gap up compared to the yesterday closing. As usual nowadays, if it is a big gap down, it completely recovers in the first 5 to 10 minutes, and if it is a gap up, and it's getting sold. So this gap up got it sold to the yesterday closing. And in this fall, what happened is, it was not a big IV spike or anything, but because the move was fast, some of my entries, puts, not even some, I think very few entries puts, they got, the SL got hit, especially where the stop loss was a bit small, and then we saw a nice green candle. So in the next at 920 onwards, so we got a one red candle and equivalent amount of green candle. I think up to this the story was good, because this move was gradually going up. It was not like a immediate reversal or something. So the things were looking good, and also from the straddle premium point of view, I think we saw a nice decay of even though the straddle premium opened around 105, 110 levels, I think it kept falling up to somewhere like 92 levels. But the moment let me show you the underlying. The moment Nifty broke the day high, so then I think premium started pricing the risk of one way upside move, especially breaking the yesterday high, that kind of things and all. So then from the day's low, Nifty straight away shot up from almost like a 150 points. So this particular green candle, I think this has pushed IVs, and IV started expanding, and straddle premium from 93, I think it shot up by 45 to 50 points from 93 to kind of 143 levels. In kind of it just in 10 minutes IV shot up. Okay, so this is where because the calls were going up and the puts were not dropping much, so some of the most of my morning entries calls call stop losses got hit, and especially the ones, the aggressive strategies, where I try to capture, the focus is mainly on capturing the theta decay, they got badly hit. So and but the short stop loss ones and medium stop loss ones, so those were calls got, stop loss got hit, though puts were not decaying much, but they were not into the deep loss and all. So that's how it started. But then this is the I think I posted in in X, Twitter also. This is the exact point. If you look at the daily charts, let me just show you the daily chart. So if you look at the trend line, so this trend line, so on daily charts, this has been the trend. So when Nifty went close to the the downward trend line, so it started facing some resistance. So I was wondering, if it respects that resistance, the Nifty may consolidate for some time, but if it breaks up, then the IVs will shoot up further, and there can be a significant move up to the next swing high of 24, basically 24,900 levels. Of course, that's what happened later. So let's look at the step by step. Okay, so as Nifty started facing the resistance and then did not break that trend line in one go, so obviously IV started cooling off and the straddle premium steadily started falling there. Okay, so this is when this is where I think the some of the losses started coming down. I think yeah, there was a good recovery in terms of, though predominantly I had a puts, but still puts also started falling, and some of the entries after 9:30, 9:45 and all, they started enjoying the decay. So that's how the day went till 11:20. There was an interesting observation around this particular around this area. If those who would have seen, this is where the Nifty underlying was not moving much, but I've clearly observed options buying during this particular phase. So I think if you look at 11:15 onwards, so from 11 to 11:15, so there was no much change in the underlying, and this is the time. So up to 11:15, this is the time. So when it is consolidating like that, given you still have a good premium, I think I was expecting some more decay, but the premiums were not giving up. They were not falling. That means that there is a buying pressure on the premiums. So whenever this buying pressure, whenever there is a buying pressure on the options, when there is no decay in spite of consolidation in underlying, I think I explained in the last video on Tuesday also. So one can, most of the times, you can expect a move on the either side, either upside or downside. So that's exactly happened at 11:20. So at 11:20, so we got a small spike. So again it tried to break the trend line, but it failed to do that, and then the next few minutes was something like again there was a small IV spike, and then that got settled down. But here we got the real bouncer around 12 o'clock, and there was some buying of options by the you can call it as market maker or whatever it is. So there was the straddle premium again started going up here, but once the day high, this particular day high was broken, and then this is the real the real bouncer, which did quite a lot of damage for the option sellers today. So at this time straddle premium was almost like at 75. So exactly in kind of another 15 to 20 minutes, the straddle premium shot up. It got double, so from 175 to almost like a 150 levels. So this is when what happened was there were the positions, some of the positions which entered between the 9:30, 9:45, 10, whatever, till 11:30, they were all doing decently okay, but this IV expansion, and especially it happened with the big green candle, so resulted in not big slippages Nifty because there was a very good liquidity. But again, the story is the same. The puts were not dropping, calls shot up, and then so as a result of that, MTM started flying. So I think this is the time my account was almost like a 0.8 or 0.9% down. So when this particular move happened, okay, and as expected, it hit that, and then went on to the up to 24,900 levels, which is a recent swing high in the daily charts. Okay, and it couldn't break that. So there is again Nifty started facing resistance, and then when it started facing the resistance, obviously the IVs which are shot up, the straddle premium which is shot up, started cooling off from here onwards, right? So from there it started cooling off because the risk of breaking day high, it's played out, and then though you will get a kind of a direction once the momentum in the underlying drops, IV starts cooling off. And given today's, these are, we are trading the 0 DT's expiry days. So the entire time value has to become 0 by end of the day. But the question is, whether it becomes 0, start decaying from 11 o'clock or 12 o'clock or 1 o'clock, even 2 o'clock. So that's not something, which is guaranteed these days. Okay, so now as Nifty started falling, up to here, so there was a good IV spike, but again, Nifty started consolidating again. So one of the learning is, whenever you see this kind of a consolidation, so though overall the straddle premium started falling, unlike last Tuesday, after 2 o'clock, or I think post noon session, it was a very smooth decay throughout the day. But if you have seen today, the decay was not smooth. It came with many IV spikes, which may trouble you depending on your setups. For example, if you see here, so sudden straddle premium jump of 106 to 128, which is almost like a 20-25% straddle jump, and that too happens very shortly. And then so if you see, this is the pattern that we are observing many days of late in the last 1 month. So straddle premium started decaying, but with a lot of hiccups. Okay, it's like underlying forming a lower highs and lower bottoms. So that's how it started falling. But nevertheless, overall, the straddle premium started falling, at least, unlike in the morning phase, right? But this fall came with a direction. Okay, if underlying is consolidating and the fall is happening steadily, that's a golden period. You can make a lot of money, and even if you're in a loss, losses will quickly get recovered. But if you have a underlying falling and that straddle premium also falling, so that is when, unless you have a strategies which have a kind of small or medium stop losses, you will not be able to capture the direction, or you need to have some kind of a rolling directional strategies, right? So as the fall was steady, up to here, there was no much IV spikes, except that 10 to 15%. But what happened was, whatever the call stop losses got hit in this move, so some of the strategies, they are left out with kind of a puts only open. But those puts did not shot up much because the IVs started cooling off. But this is when, if you observe, this was the day high, till so far this, and this was broken, this particular candle. This is where the Nifty broke. When I say broke, the breakout happened here. So usually, whenever the day high breaks with candles like this with a big volume and all, so ideally that should be, we can expect that to act as a support. Nifty tried taking support somewhere here, but this particular red candle, it clearly broke that the support level. So the previous high acted as a support till here, but that was broken. Once that was broken, again we saw a kind of a IV spike here. If you look at 1330 candles, I think so the premium was holding. During this period, the premium was not falling much here. So because basically it was expecting a it was pricing, the options were pricing like upside or downside move. But the moment this downside move happened, I think I posted in Twitter also, the moment this risk of breaking upside or downside played out, so then the premium started falling, right? So but what happened was, because it's a big red candle, that to happen quickly, so all the puts, some of, I won't say all, but the majority of my puts, they kind of they took a hit. Okay, they took a hit, and my MTM slightly again increased. The reason it slightly increased compared to here is I had some of the entries, I think after 12 o'clock, like at different times, so those started enjoying the decay, though for some of them, the put stop losses also got hit, right? And so this is the real actual decay happened post, I would say, from 315 or 330, if you look at here. So up to here, So it was a steady, I mean, it was a decay, but with a lot of hiccups. But from 130 onwards, it's a massive decay, right? And it's a massive decay. So this is the decay at this time, and this decay happened. And luckily, I mean, Nifty also started consolidating, and once again it tried to break the day's low, but it couldn't do that, and it's not a big candles, big red candles. So because of that, the straddle premium continued to fall, and IV started cooling off pretty much, good. And most of my entries, I think they took, I think, 750 24 750 straddle and few 700 straddles, mostly 750 straddles. And as you know, the Nifty also exactly almost closed around 25 750. In fact, I mean, the premium straddle premium 750 straddle premium closed around, I mean, 1 rupee. So because of that, I was sitting on a loss of close to 1%, up to here, I think 0.9 to 1%, and all of that losses got recovered, by this time. Especially the entries after 130, I think they made a killing. One more observation is, I mean, I do have, some of when these kind of IVs shoot up, I do have some counter strategies to short the short the IV spikes, and some of the strategies basically counters the one side move. Generally, I mean, sometimes they help. If you have a kind of a time-based strategies and all, so if they start giving a trouble to you, I mean, these kind of a counter strategies usually helps you in case in case IV starts getting cooled off and the market starts consolidating after your entry. And sometimes, but what happens is sometimes when the IV expansion, it prolongs. Here there was IV expansion, but it prolonged up to here. Some of the entries, which got triggered and entered and with decent premium, but they couldn't. Some of them, they were able to there till the end, but some of them, because of the stop losses I keep and all, so they couldn't withstand the IV expansion, and they their stop losses got hit on both sides. So that's why, I mean, these counter strategies are good. I mean, we need to have given the kind of a moves happening and IV expansion happening these days, we definitely need to have some regular strategies and with the different stop losses, and also counter strategies and IV shorting strategies and breakouts, all sort of strategies. But if the market goes crazy and if the moves are very quick along with the IV expansion and followed by reversals like this, then even your counters also will start bleeding. There is nothing much we can do about that, because I mean, we cannot have a setup for everything that is happening in the market. If that is something we can do, then there won't be any losses at all. I mean, which is sort of impractical. So we have to take some of these when those started counters also falling, we have to take it with the pinch of salt, because that's a reality, and then go back and try and work out, I mean, what else we can do more. Okay, but as one of the advantage with the zero DT is the time value has to become zero by end of the day, and at some point of time, if your setup gets into some good entries and markets goes sideways and IV start cooling off, when there is a probability, I mean, you can turn into the green. SENSEX was one of the example, because though I was in a similar kind of a losses, the decay was very steady without any hiccups, so the day turned into green. But today I'm still happy, because almost like from 0.9 to 0.1%, my day closed with about I think 1.3 lakhs loss, which works out like a 0.3%, 0.3% loss on my capital size. So yeah, happy with such a good recovery in the afternoon, but you need to see, I mean, if you have to work on building some strategies, counter strategies for further counter. I mean, any overkilling also will not help. So we shouldn't be taking some of the we shouldn't be taking the decisions just by looking at the one-day market. But I'll keep making a notes and see. I mean, if the trend continues, probably when we need to think about working on those lines. Also, what I noticed is I do allocate, a significant amount of a capital. Probably say, 40 to 50% on aggressive strategies. Which takes positions in the morning itself. They have been doing very well. So till I started facing the heat of from those strategies in the last September to November period. Where we saw similar kind of a moves, but then the things got settled, and till mid of April they got very good profit. But then now with this kind of a moves almost like every day, I feel I could sense like there is a regime shift, and this volatility may continue. And these aggressive strategies, I think they have gone through, they kind of hit a maximum drawdown. To be honest, the max drawdown on those strategies was so far 8%, but I think this time on those strategies it has even I kept another cushion of another 2% additional buffer. So I think it surpassed even that buffer also, and they are falling over almost like a back to back. So I would be I already started working on what to do with them. So I will be doing some tweaks, and also will be changing my allocation. I will be reducing my allocation to some of the aggressive strategies, and then use that capital to spread across at different times on different setups. Now that's one of the kind of a information I am just passing on to you. If you are also getting bleeded with any of the aggressive strategies that you may have in your overall setups. I'm sure these aggressive strategies will start probably giving a very good returns, but what I'm also concerned is the max, the drawdown. So if I have a strategy, according to my trading personality, so if I have a strategy, if that is giving a back to back, the big losses and the drawdowns are out of control, that's the time obviously I need to take a look into those setups, like if there is a change, and the time has come for them. Yeah, so I think that's all for today. I think I covered whatever I wanted to cover. And just to show you the panel, I think this is the this is the account. I trade kind of all spread of strategies, be it aggressive, conservative and all. So this was in a loss of almost like I think 1.8 lakhs or something actually, at some point of time, and it came to flat. And this is a small account, ended with about 5,000 loss. And then my other account, so it ended with 1.25 lakhs loss, so which is overall loss of 1.3 lakhs, which is 0.32% I think on my capital. So that's all about the Nifty 0 DT today, Nifty expiry today. And I hope some of the information whatever I am sharing here is useful to some of you. Any questions, you can post it in comments. And if you like this content, probably just give a thumbs up and share it with your friends to whom you think this is going to be helpful. So that's all I wanted to cover. This is Reddy signing off for the day, and I'll see you on next Tuesday with the SENSEX expiry day.